3 years ago, Brian Feroldi shared a thread on back then Twitter with a list of 20 companies that have a potential to increase by 50 times. The list was not his, but it was based on the input of other Twitter users, and given the number of responses, I thought it was a solid representation of what the average investor was excited about back then. So I bookmarked the thread, and here we are 3 years later, ready to have a look at the wisdom or stupidity of the investment crowd. But before I start, do not forget, the sentiment at that time was very positive. The S&P 500 was up over 90% in just a bit over a year since the pandemic low back in March of 2020. The table shows the performance of these top 20 stocks that have 50x potential. And as you can see, the average decline was a staggering 70% compared to the gain of the S&P 500 of 28% over the same period of time. Not only that, but all of the 20 stocks underperformed the index. The reality is, it is easy to look like a genius in a bull market. Positive sentiment drives stock prices up, and it also hides the underlying weaknesses. The fear of missing out adds more fuel to the fire, but also there was fuel in the form of stimulus checks. However, this of course doesn't last forever, and market conditions change. When that happens, risky investments and poor strategies are exposed, and those following the crowd without doing their homework eventually learn a harsh lesson, as we've seen in this perfect example. The dramatic decline in these stocks serves as a cautionary tale about the dangers of following the crowd in investing. Despite the initial optimism and promising potential, the reality has been a harsh lesson in the importance of thorough research. As Warren Buffett said, only when the tide goes out do you discover who has been swimming naked. Hope that you enjoyed this video, and as always, I'll see you in the next one.